May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. Hello, my babies. January 30th. Holy smokes. The end of the first month of the year, and it feels like New Year's was just yesterday. I really hope that you're implementing methodologies into your trading that's helping you become more controlled and more consistent. And then a part of that control and consistency is your use of fundamental bias. And that you aren't just looking at a news calendar and you're using that to decide what your bias is, that you're actually using proper quantitative analytical tools to identify whether you're a bull or a bear with regards to the various asset classes that you're trading in the currency exchange market. How could you do that? It's very simple. A tool like QuantBox, your global macroeconomic Quant-in-a-Box, does that for you. This is a tool that collates a whole bunch of data very intelligently for you and provides you with a fundamental bias. It collates commitment of traders data, retail sentiment data, economic data, seasonality. There's even some technicals. And the beautiful thing is that a weekly trial is just $7.90. Now, in these sessions, what we do is we take a look at our market heat map. And this is something I've been doing consistently for a while now. This is the strategy. You'll have to excuse my voice. I've got a bit of a cold at the moment. So what we do is we look at the market heat map. It's a very simple strategy, okay? We want to save time and be more efficient and identify opportunities which are more present than just going through our entire market watch and looking at every single currency pair, okay? We want to look at currencies that are currently very bullish, currency pairs that are very bullish or very bearish. We then want to match those up with fundamental bias. So, for example, we look at KiwiCAD over here. Well, let's look at USDCAD, right? USDCAD is currently one of the most bullish pairs for the previous session, up 0.19%. Okay? So if we take a look at our QuantBox over here, and we look at our USDCAD, we can then say, right, so USDCAD is currently coming through with a bias of neutral. Okay? So currently bullish on the session, currently neutral in terms of overall bias. So we then take a look at our charts. We jump into USDCAD. And because of the fact the fundamental bias is neutral, we're able to look at the technicals and say, right, well, what are we in position for? Okay. Taking a look at the daily, we can see right now we are currently ranging. Now we are at a monthly profit-taking zone. We were here last week. We spoke about the potential to buy this at the bottom of the range, right? So looking at where we are right now, excuse me, we currently find ourselves coming off a weekly M2 at the Asia session, confluence with monthly M1. So if you're buying this, what you're looking for is a higher high, higher low. We spoke about that on Friday, saying wait for price to break up, make the higher high, pull back down for the higher low. Now currently, we can actually delete this range on the left-hand side here. Let's look at the H4 time frame. And you can see here that price was in this range. Price is now broken out of this range. Price is now currently pulling up to the bottom of this range. You got this 21 EMA down here. If you were going to exercise bearishness here, you certainly could do so. But I caution you to how out of position you currently are. On the 4-hour time frame, it looks fantastic in terms of, oh, look, price broke out the range. It's not pulling back. But on the daily time frame, you find yourself still stuck in the range. Be very careful that you think that it's the bottom of the range, but sorry, you think that you've broken out the bottom of the range, but you're still currently ranging. Now, to verify everything, all you got to do is look at the M15 time frame. And if you're going to if you're going to look at daily pivots, for example, and do a daily R1 to daily S1, you certainly could do that. Or you could wait for price to pull back down to support and then take it back up to the daily targets. Because of the fact that you're at the bottom of the range, you shouldn't be selling down here. Okay, this really shouldn't be a place you're looking to sell. So if you look at the charts over here, if you just look at daily pivots, this might seem like a great selling opportunity because of where you are right now. I wouldn't sell down here. Okay, what I would wait for is I'd wait for verification of bullishness, so some kind of higher low, 4-hour, and then potentially take this back up to the top of the range. That would be my view on USDCAD. Okay, so now moving on to the rest, we look at KiwiCAD. There's a KiwiCAD, we do the exact same thing. We look at KiwiCAD, we say, let's pull up our crosses. We say, okay, we've got KiwiCAD over here, coming through with an overall bias of buy. Okay, so that's bullish. So now we've got this currency pair that's currently bullish with a bias of bullish. So our goal here would be, can we continue the trend, if there is a trend? So going into Kiwi CAD, look at the daily time frame. We can see that we put this into a range on Friday. Okay, you got this role reversal down here. You got price in the 21 EMA over here. Fair enough, but look at how out of position you are. You're in a sell zone right now. Okay, not a place where you want to be buying. And if you look at that range over there we drew on Friday, look at this. Look at this 21.55. Look how flat they are. Okay, not something you want to get involved in. So you instantly, instead of tempting yourself, you instantly move on and say, are there any better opportunities out there? Euro Aussie dollar, let's take a look. So Euro Aussie dollar coming through the bias of sell. This is nice because we've got this pair that's currently bullish. We've got a bearish bias. So therefore, has price come up to resistance? Take a look over here. Euro Aussie. Okay, so on the daily time frame, you can see we haven't looked at this pair yet. So all we're going to do immediately is we're going to put this into a range. Say ourselves, okay, groovy. We're currently at the bottom of the range. Okay. So now, can we exercise this? We're currently at a monthly S1, which is the typical pivot point that one would be using if they were in a range, which we are currently. Looking at the H4 time frame, you might see a trend on H4, but look at your daily. It's not trending, it's ranging, okay? So you would not want to sell at the bottom of the range. You can see how multiple time frames is incredibly important because you'd look at this and say, oh my goodness, what an opportunity to sell. Okay, but you are at the bottom of the range. So because you're at the bottom of the range, zooming out and recognizing that, you would avoid the sell over here. But if you decided, well, maybe what if price is bearish at the bottom of the range? Well, then, where's your lower low, lower high on the M15 time frame? Okay. If you look at the exercise bullishness at the bottom of the range, you're going to need something on the H4 time frame that indicates that price is no longer going down. So this 21 EMA is a great opportunity to see what happens to the price next. I would sit back. I would wait for this candle to close. I'd sort of wait for a couple of market opens today. Does price make a lower low? You can't sell here because you're bottom of the range. If price fails to make a lower low off this 21 EMA, comes down, makes a higher low. And then price comes up and breaks that. The price pulls back down and makes a higher low again. You can see that how the indication of technicals shows that price is no longer bearish. Price is actually moving higher up. And you could look then for opportunities for bullishness to then trade price up at the bottom of this range. Keep an eye on your daily and remind yourself where price is overall. Okay. Great. Of course, your bias is bearish fundamentally. So you could also step back and say, well, right now, if I was selling, I should have been selling over there, potentially over there, middle of the range though, but definitely not down here. You can't exercise the fundamental bias right now based on the technicals. Dollar Swissy. Let's skip Dollar Swissy. Let's look at Aussie CAD. Well, I suppose we could look at Dollar Swissy. Let's do it. Okay, we'll look at the top line. So Dollar Swissy over here. Neutral. Okay, groovy. So jumping into Dollar Swissy. My apologies. Let's go look at it. I haven't got Dollar Swissy saved on my charts. Let's use the default chart. I'll just jump in here and let's put. What is up with my mouse pad? It's been funny. Okay, let's bring up the market watch. Let's bring up the Dollar Swissy. Let's pop it in over here. We'll pop one in over here. We'll pop one in on the right-hand side. Let's take a look. So from a daily perspective, you can see here, wow, this mouse pad's being tricky. You can see over here, we've currently got this range. Okay. You have got price coming up to the bottom of a previous range. Excuse me. But look at what happened last week. Price comes up, bottom of the range, price comes down, doesn't make a lower low. I don't see this as being very bearish. Okay. So look at the H4 time frame. You can see here we've got another little range inside a range. Everything is currently ranging. Okay. And so based on that, you are currently coming up to the top of the range. And so you might look at exercising sells, but then on a daily time frame, you know that you can actually take this range and actually move it like this. and recognize that right now this tight range is not very reliable. Okay, so I would just look at this and say, you know, thank you very much. Excuse me, next lady for a shave. Okay. Let's take a look. You can do the same thing for your Aussie CAD, pound CAD, pound Aussie, Euro CAD. Just look at the bias on the other tab, and you can then look at the technicals, and you can then confirm accordingly. So in terms of yen pairs, look at all our yen pairs: Aussie yen, CAD yen, Euro yen, Swiss yen, pound yen, Kiwi yen. All the yen pairs currently down, right? So from a yen perspective, risk not looking very good. However, what's interesting is that our indices are up. Okay, so there's some divergence taking place. So let's take a look at our yen pairs overall. Now, we know the yen pairs have been ranging recently. It might be a continuation of that. Neutral Aussie yen, CAD yen coming through neutral as well. Euro yen coming through neutral. Pound yen coming through neutral. And Kiwi yen coming through neutral. Okay, cool. So let's take a look at our yen pairs. Okay, starting off with Aussie yen. Okay, you can see here, we've got this range. We trap price in. Price is broken out. Price now coming back down. Where does this daily candle close? I'm going to wait for this close or this daily candle to see where price is. Okay, has price closed at the top of the range? Can I then buy this and take it up? Or has price broken back inside the range? And can I sell this and take it back down? But I need to see how this daily candle closes first. Okay, if you are trading off of this resistance over here, you can see if we look left, we got this resistance over here. If you're looking at this and saying, hold on a second, price came up close to this resistance, price is now coming down, you want to trade the continuation of bearishness. And what you're doing is you're saying, okay, I've got this previous range. Let's get rid of this previous range. Let's put a new range in over here. Okay. And you would look at this and say, hold on a second, price is currently at the bottom of this inside range, right? Well, this range, it's part of this range over here. So where does this candle close? Does price break out? Do we pull back? And can we sell this down? Or does price climb down and close at support? Can we then take that up? But you wouldn't just use the H4 time frame. You're going to verify everything on M15, M5, etc., etc. Like, look at where price is right now from a daily perspective. You're not in a place where you'd like to sell. So there might be opportunities to buy this back up. But personally, I do like the idea of waiting for this daily time frame to close, okay, and seeing where price closes. But it's up to you. There's various ways you can do this, okay? All right, cool. Also, you're coming with a weekly M3. The problem is that everything's sideways, so your pivot points might not be as reliable. You can see last week, look how unreliable pivot points were. Why? Because pivot points work in a trend, okay? Sometimes you'll get the extension all the way to the target. Sometimes you won't. So you've got to be careful, right? I think ultimately what you're waiting for is waiting for a trend, i.e. lower, low, lower, high, higher, high, higher, low, etc., etc. Take a look at the next yen pair. CAD yen. From a daily perspective, still stuck inside this range. Just leave that alone. Euro yen. Stuck inside this range. Okay, cool. We spoke about this on Friday, coming off the top of the range. Like, you can trade that range, or you can just wait for price to like not be in a range anymore. The fundamental bias is neutral, and currently technicals are neutral. So price coming off top of the range. If you trade the top of the range, and maybe that you're doing all the yen pairs, but you can see here, so far as the range is concerned, we drew this on Friday. It continues. I don't want to trade this low volatility. I'd rather wait for better conditions. Be patient. Kiwi yen, you can see they're still stuck in the range. So now you can do the exact same thing I've just done, but you can extend this to more of your currency pairs. And you could say, right, I've got all of these down here. Let me look at the fundamental bias, look at the technical bias, all these guys up here, same thing. You could also look at your dashboard, and you could see, well, your top buys are these guys here, your top sells are these guys here. Verify their biases. This is fundamental bias, though. It doesn't mean technicals, though. It just says that pound Kiwi is a stronger sell from a fundamental perspective. It doesn't mean It's technically viable. So marry those technicals, use your lower time frames for verification, and if there's an opportunity, take it. But be very, very patient, be very, very disciplined, and you will remain liquid. I wish you a good day. I look forward to seeing you tomorrow. All the best. Cheers.